Well, first of all, good morning, ladies and gentlemen. As I like to do, I'd like to acknowledge, first of all, the sort of, for want of a better phrase, major ego in the room, Marin Katusa, the person who caused this to occur. Turn around and give Marin a round of applause. The gentlemen on my left, the panelists, are the people that are going to make the panel a success. And by the way, everybody's on my left. I'd like the panelists to begin on the far left by everybody in the panel introducing themselves briefly and telling the audience why they're here and what they bring to the equation.
All right, thanks very much. I'm Dave Cates, President and CEO of Denison Mines, as well as Uranium Participation Corp. So, Rick, what I like to think is I bring that Athabasca slant, large-scale Eastern story with Denison to the panel, but also the UPC side of things. I mean, we've raised money to buy physical, so we've been actively in the market buying uranium. That's real market intel as to what's going on, and I think that's probably where I'm going to try to jump in the most.
Jordan?
Great. So I'm Jordan Trimble, President and CEO of Skyharbour Resources. For those of you who don't know Skyharbour, it is one of the few remaining high-grade Athabasca Basin discovery exploration stories. We have properties both on the west and the east, actively exploring right now, partnerships with Denison and Areva.
Good morning, Amir Adnani, President and CEO of Uranium Energy Corp. We're focused on in-situ recovery, so roll front sandstone hosted deposits in the US and in South America and Paraguay. I'll talk about that and the physical market or whatever else you need, Rick.
Dev?
My name is Dev Randhawa. I've been here since 1996. My first investor was right here. So I've had the pleasure and pain of several cycles. And so hopefully I can bring some insight into that. And Fission is primarily based in the western side of the Athabasca.
Let me start by doing something I seldom do and say that the panel in front of you is comprised of some unusually high-quality CEOs, which is a good thing because they're in a really, really, really treacherous sector. A steady hand in a sector like uranium is what you require. If you look back over the last 20 years, the price goes from $30, not so bad, to $8, catastrophic, to $130, not bad at all the way back to $18, catastrophic. I mean, talk about up and down, there's nothing like it. So I'm going to begin by asking each of my panelists to tell me again briefly, no war and peace here, where they think we are in the uranium cycle. More pain over, gain starting. Dev, we're going to start with you. Where do you think we are in the uranium cycle? And then we're going to have some fun with your answer.
Well, I think we're within, I've been saying for about a few years now that it's 3 weeks or 3 years. And I always felt it was a supply disruption that we needed. The best thing for low uranium prices is low uranium prices. You cannot have people return to produce when the prices are low. So finally last week, we've had that disruption. So I believe it's the beginning. And yesterday Honeywell saying, hey, we're going to cut back processing. And you've seen uranium go from $20 to $25. So I believe the bottom is within this year, if not less. I actually got an encouraging note last night from the mothership of the entire industry, from CGN. They feel it'll be $40 by next year. So I think we're at the bottom, if not already upticked.
Amir?
I think it's what we have for the first time in the uranium market since Fukushima happened is we have a genuine, bona fide perfect storm. And so to me, when I look at sort of the culmination of factors that are at play right now, we have for the first time momentum building in Japan with the Japanese reactor restarts. And the recent election and Abe's victory in Japan really helps kind of underpin that momentum going forward. You have the Japanese momentum happening at the same time as real supply cuts. And when I say real, it was different when the Kazakhs announced the cuts in January. It was positive, but it wasn't a shutdown of one large mine. The McArthur River shutdown, the news that came out on November 8th, is the largest uranium mine. It's big, it's meaty, you can see it, and you can really feel the impact. And for the first time since Fukushima, we have more reactors under construction now than we did pre-Fukushima. And last year and the year before that, more reactors were connected to the grid than in 25 years. So I think it's more about the perfect storm. We have a culmination of factors playing together and unfolding at the same time now, and this to me is what really stands out. I'm confident to say that I believe the worst is behind us. I'm not very good at sort of forecasting where I think it's going to be, this year or next year, but we know the producers can make money at these levels. They can make money probably until we see prices back over $40. And we know that incentive price to build a new uranium mine is north of 60. I think you figure out the rest from there.
Yeah, I'll echo what Amir's just said. That perfect storm's key here, right? We know that demand's growing at a steady clip. I was at the WNA, World Nuclear Association conference in London earlier this year, and they went through the list of reactors that came on last year. As Amir said, more nuclear capacity generation came on the grid last year than any year in the last 25 years. Well, half of those were in China, right? So we see new reactor builds, big reactors coming online in the developing world, Japan coming back online. But as we talked about at the Cambridge conference, Rick, in Vancouver, it's really going to be a supply disruption in the supply side that was going to be the catalyst. I think we've seen that. I truly believe we've seen a bottom here put in. McArthur River, that is significant news. This is not a marginal producer. This is one of the lowest cost producing mines in the world. This is the largest uranium mine. It is being shut down for the majority of 2018. This would be like waking up tomorrow and the top headline is Saudi Arabia is planning on not producing oil for the bulk of 2018, right? That's a significant headline. And so I do think that the bottom's been put in. The very few uranium companies that have survived this, that have been opportunistic in a down market, will be the benefactors of this, and you as the shareholders as well.
Rick, the bottom was 18. We're above it. We're going higher. And these guys have all made very astute points. What I point out is that there's not a single utility in the world that I would guess was expecting McArthur River to be suspended. And I think that's the most important part of this perfect storm that these guys are talking about, is that they've all gone back to their boardrooms in their utility, buildings, and they've asked themselves, what do we do now? We expected McArthur would go forever. What's the next mine that gets shut down? And why aren't we contracting right now? Because we need that uranium, and who would have thought a McArthur would come off? That's why I'm pretty comfortable 18 was a bottom. Where it goes, hey, the utilities will be the ones that dictate that, depending on how aggressive they get and when they get aggressive, and if we can at all get supply to them in time.
Well, we learned yesterday at the conference that the future of the world isn't in mining, it's in cryptocurrency, in fact. And given the electricity that seems to be required to transact Bitcoin, it's obvious between that and electric cars that the world finally is going to run out of watts. I had this on good authority yesterday, just because Bitcoin. Anyway, I'll leave that alone. Where will this electricity come from? I mean, we live here in the realm of Governor Moonbeam, and it would seem that nuclear power and coal and natural gas and all that are sort of obviated and back in the age of Rick. Are we going to need nuclear power? Who wants that? I mean, why bother?
Well,
I mean, if the sun shines,
yeah.
Right?
I think the best answer to Rick's question is my 7-year-old trying to help me get the uranium price up 2 weeks ago, and saying, Dad, the trick is you got to create a uranium car. If the car was running on uranium, this whole thing would work.
There is that.
There is that, and it's called the electric vehicle. Right. And the whole point here is that when we look at 7 billion people in the world living lifestyles and using tools and machinery that requires more and more and more electricity. I mean, electricity is the fastest growing segment within the energy complex. It goes to show you that we all have these habits where we like to charge things at night. The problem is when you have renewables with 25 or 30% capacity factors, we can't all be charging our devices at the same time. We need that base load. I mean, this is as obvious as the sun will shine and whatnot. So I think what I find remarkable, Rick, is the fact that you're right. Whether it's computational power for bitcoins, electric vehicles, all these crazy things that are trading at ridiculous valuations require electricity. Meanwhile, the metal needed to generate baseload clean electricity is at a decade low. If this isn't the investment opportunity right now, like the biggest investment opportunity we're going to see, I don't know what is in terms of a dislocation.
You know, we're living here in California. If I go 50 miles north of here to the geysers, and I bring a great big, ugly West Texas drilling rig, you know, with a bunch of politically incorrect guys with shotguns in the back of the truck, and I buy a geothermal well, or I drill a geothermal well, I actually get an order of commendation from Napa and Sonoma County. If I go into the California desert and I bulldoze 640 acres of the Mojave, and I put up reflectors that basically incinerate hawks, I'm regarded as a sort of a savior of the environment. But if I go to build a nuclear power plant, I'm very lucky if I don't get hung. How do we juxtapose those, and who wants this?
I'll take, like Rick, I'm not trying to hurt people's feelings here, but it's not just about America. Hate to break it to you. 20% of the energy in this room comes from nuclear power. What America's done, China wants to be. They are right now getting about 4 or 5% of their energy, and they want to get it to 20%. To that, they got to build 200 reactors. Today, Westinghouse and somebody else are combining to bid on 2 reactors in Saudi Arabia. Saudi Arabia, home of cheap oil. As long as we want more energy, it's got to come from somewhere. So unless someone can guarantee me the sun shines all the time, 24 hours a day, and the wind blows 24 hours a day, and you can have base load through it, hey, maybe we don't. But I hate to break it to everybody. The rest of the world is adding nuclear to it, and we get caught up, and that's where money is made. You want to follow the one little story about California? That's great. Then you're going to be one of the sheep that gets lost. But if you want to look at the rest of the world, the reactors are being built in China, you know, Saudi Arabia, everywhere else where they don't put their finger up every time they want an election. Look at the disaster in Germany. 600 billion euros have gone into this green thing, and it's a complete meltdown. So there's no doubt the mothership of this industry is going to come from China, and they need it, and they will continue to grow and grow. So I'm not that worried about the desert in California, in commie land here. I'm thinking about the rest of the world where they really do need it. India, China, you know, that's who needs it.
Yeah. So let's turn it around. We got 3 Canadians on the panel. Mm-hmm. Will the drama teacher let you build a uranium mine in Lotus Land? The drama teacher, for those of you who aren't Canadians, is this guy Trudeau.
Well, look, actually, I mean, Rick, we are refurbishing our biggest plants in Ontario, so that's happening.
Bruce, no, I meant will they let you build a mine?
Oh, uranium mine.
Yeah, I know. With Bruce, they have to let you refurbish it, otherwise they have to tear it down.
Yeah, no, look, I mean, we already have the 2 largest uranium mines on the planet.
But will they let you build a new one?
Yeah, absolutely. Why not?
You think so?
Yeah.
Okay. Absolutely. I mean, yes is a fair answer. I just want to ask the question.
Saskatchewan is ranked the #1 mining jurisdiction in the world by Fraser Institute. We have 60 years already uranium mining experience. It's a very isolated area, so I don't see 0 issues why they would say no.
And just to add to that point too, #1 mining jurisdiction in the world, but you look at the northern communities, right? A lot of Aboriginal population up there. The #1 employer, First Nations in that province, is Areva and Cameco, 2 uranium producers. So it's also about the local communities, and that's one of the reasons Saskatchewan was ranked #1. Is there's very good relations between the mining companies, the developers, and the First Nations in the northern communities.
Okay, now this is where the rubber meets the road. Many people in the room. I mean, the reason why there are people in this room actually is a consequence of the last bull market in uranium. That was the most amazing financial experience of my life, certainly. And I think everybody's here because of, pardon the pun, the explosive upside. The problem is the wait between now and that time when the move becomes apparent to people. It was obvious to me the first 2 months of 2017 that we used up the sellers from the prior cycle, and a little bit of volume took all your stocks up 200 or 300%. The question I have for you, though, is not a sunshine question. The question is, how many months of operating expenses do you guys have now? In other words, do you have to finance one more time before the blessed event? Or do you have enough money to get through the next 2.5 years, assuming that that's how long it takes for the market to run? I don't know who wants to start. Who's got money? Who's going to run out of money?
We got $40 million. We have zero debt. Our
But you have
partners.
expensive tastes. How long is that $40 million going to last?
We've budgeted. Marshall's has pretty good, shorts that I bought yesterday. For us, we have we're owned 20% by the Chinese government through the SOE, and we were told they're so negative, it's unbelievable. And so we have planned for the next 3 to 4 years to still put in 10, 15 million, and then we have 40 million in the bank and no debt. And they've told us they're happy to give us more money, but how much we give them. So for us, we have 3 years at least of drilling and overhead left.
So no need to finance.
None.
Amir?
Many of you participated in the UEC offering that we did January of this year, and I think everyone knows that financing was to give UEC a real war chest to get through not just a couple of years, but 3 years of run rate. So as we sit here today, we're funded for the next 2.5 years. And our strategy on what we're doing is very different than the kind of projects that these guys are developing in Athabasca. Athabasca is a great jurisdiction. But as many of you know, UEC doesn't have big capex requirements. We're built at our Hobson plant. We're built at our first mine with Palangana. So we don't have significant capex requirements to finance and build, which is obviously another kind of part of the equation in terms of how quickly can you get back into production. But to answer Rick's question, 2.5 years run rate for us. And the other thing I wanted to just add to that, Rick, is, from my perspective, and also not being focused on a single asset and obviously looking at expanding what UEC is doing, I would very much like to see the uranium price stay low for a while longer, because it has been one of the biggest blessings. I mean, to be able to make acquisitions this year, last year, and the year before that, the amount of deals that UEC's managed to do in terms of new projects that we've managed to bring in, I think it's been a once-in-a-lifetime opportunity, and I want to have at least, hopefully maybe one more year where we can take maximum advantage of this, tuck away good quality pounds in the U.S. and elsewhere. And that's something that gives me a little bit of pause. If the uranium price pops tomorrow, I'll be a little irritated, because we're working on deals. We're looking at building a bigger asset base, and this market right now is perfect for that.
Jordan?
We raised money earlier this year at a higher price, so funded the drill programs that we're carrying out. We're just finishing one right now, and we have a winter drill program planned at our flagship Moore project. Getting back to your point, Rick, I think it's important to, especially if we do see a rising tide in the uranium market over the next little while, that you are able to generate some news flow, keep investors interested, keep people watching the story. And so we're very selective with where we spend our dollars, very focused on our highest priority targets, in particular at our flagship Moore. It's a high-grade project. You talked about this yesterday, Rick, in the afternoon talks, but there's been a lot of exploration dollars wasted in the last 10 years. Well, one of the interesting things with the basin, necessity breeds innovation. You look at what Fission's done, what NextGen's done, what Denison's done. Finding high-grade deposits in the basement rock. This is a new way of thinking. This has yielded some of the most incredible discoveries we've seen in any mineral in the last 20 years, in any type of exploration. Skyharbour is actively looking to be the next big discovery story in the basin at our Moore Lake project, in the basement rocks on this project. So that's one of the things that we're out there. But we also employ the prospect generator model, and I know a lot of you are a fan of that. We use other people's money on other projects to fund the exploration. So it's not just continuously raising money to go out there and fund exploration. We do have partners, strategic partners like Areva coming in, $7+ million deal in exploration to fund the exploration at those other projects.
You just saw a textbook example of using a question as a platform for a statement. Nice work.
Yeah, look, we're at, Denison's got $46.5 million at the end of the third quarter. We're funded for a really aggressive exploration program next year, and honestly, until we get to project financing, most of that money's hard dollars, so we are fortified. That's how I'd put it.
Ladies and gentlemen, great panelists make a great panel. I'd like you to thank the panelists I have up here. Our time is done. Thank you very much for your time and attention.